Small caps surging since the election, with the Russell 2000 having its best week in more than 4 years. But is that trade getting ahead of itself, or is there more room for it to run? Let's ask RBC's Lori Calvasina here at Post 9. Lori, good to see you.
Good to see you, too.
This is part of a general set of questions of what, if anything, has changed given what happened with the election and just general economic conditions and exactly how it should play out from here.
So look, I think with small caps in particular, we got another reason why they could continue to do well fundamentally, and that's inherently a buy the USA trade. And I would also add corporate taxes onto that. So if you look back to the history of the first Trump term, we had 3 distinct trades into small cap. None of them lasted. It was a very fickle market, but in 2016, we got a big surge up on economic optimism around Trump. 2017, another one on the corporate tax cuts, which small caps benefited more from. And then if you remember, this one's a little more complicated, but in 2018, when there was all that optimism on the China trade war, that China's going to have a recession, rest of the world's going to catch a cold, but the U.S. is going to be okay, people surged into small caps then. That all unraveled at the end of the year, but we did see precedent for that. And I think there's, a combination of trade, there's a combination of tax cuts, and just general excitement. You have to remember, half the country or more elects the president, and we do usually see risk assets take off after because the winner does usually get that endorsement. Yeah,
you could also even add just an anticipation of more M&A activity and just a general, maybe higher metabolism capital markets. But what about the other adjacent, aside from small caps? I mean, essentially, it's sort of interesting how the template for 2016 was, well, you got to buy cyclicals and banks and everything. Yeah. Well, that's the stuff that actually been working for months, at least on a relative basis.
So, what's interesting, the day after the election, I went back and looked at elections and leadership shifts in the market. It started out as a small, large project. It shifted into a growth value project and looking at a bunch of other stuff. Back in 2016, we had already started to see a shift into growth, and that lasted for quite some time. When Biden got elected, you saw a shift into value, and that lasted a number of months. But I came away from the study thinking, when we get these political leadership shifts, even if some of these style shifts in markets have already gotten started, there just does seem to be something about changing the political dynamics that results in a leadership shift within the equity market as well. So I think we have to take seriously the idea that some of these things, even though they got started already, may have at least a little bit more room to run.
Does the at least expectation of some of the policy movements give cover to where valuations are right now? Does it really change the equation in terms of what you can expect the market can deliver given how far we've run?
Yeah, so I think let's just look at corporate taxes in isolation. That's an easy one. We all lived through that one. And what I remember about that 2017 period and even kind of 2016 was we didn't know exactly what the new rate was going to be. It was kind of all over the place. By the time we really got to what it was announced as and the legislation was passed, a lot of the trading had already happened. And so this vague idea that earnings can be higher because taxes are going to come down. Maybe it's just a paper E, right, that's increasing, but that can boost animal spirits. And I think some of that is feeding into the market right now. Now, I will tell you, I have cautioned people. When I heard Trump speak in New York at his speech at the Economic Club, he did talk about a tax cut with conditions for domestic producers. I'm not sure the street fully understands that. I don't think we really understand exactly what a tax cut might look like. But I think the market is giving Trump the benefit of the doubt on that one right now.
Yeah, I mean, that has been the pattern too, right? You sort of front load the anticipated benefits and then see if the details conform to that or not. I mean, we can think back to 2017 where it was like company by company was pressured to come out and suggest how they were going to spend the tax cut. I mean, it's a crazy thing to recall.
I was telling my team, that's the first time I started reading earnings call transcripts.
Oh, yeah.
Because we wanted to get that color from companies on, one, how it was going to benefit from, and 2, what exactly they were going to do.
Now, we already also, interestingly, have a capex boom, mostly seemingly happening because of AI and then some of the fiscal measures out there. So is that going to be accelerated from here? I mean, it just seems as if, again, it's a lot of the policy stuff is an accelerant to what's already been happening.
So I would say if we're thinking about tech and AI specifically, I spent a lot of time during the campaign season. Both candidates seem to come out in the same place to me as friendly to AI. At Trump's speech, again, he was talking about how we needed all this additional electricity, a generation. I think it was maybe Bitcoin, not AI, but he generally has seemed to be supportive of that. And that was something I was very very focused on to see if we were getting any negative comments on AI or tech, because that would be negative for the market. And frankly, I just didn't see it. Now, I do think there's, sort of a separate issue. When we look back over the last few months or few quarters, a lot of companies have been talking about how their orders are slowing down, their customers are hesitant because of the uncertainty associated with the election. We've kind of moved into a situation where the election's not uncertain, but policy is somewhat uncertain.
Sure.
I'm going to be curious as we're reading, the off-cycle reporters, listening to conference presentations. Is that uncertainty alleviated enough? I think that's another thing markets have been cheering. I'd like to see what companies are saying about that.
It's interesting because, you could always find an excuse to not do something or to worry, and we'll see if companies, you talk about some companies talking about front-loading orders to get ahead of tariffs and all the rest. So it could be noisy.
Yeah, no, it's true. And what's interesting about the market action today, you mentioned tariffs. I mean, it's an up day in the market, not, as off to the races as we were, the first day after, but I was looking at the performance. The defensives are leading. Materials is lagging. There's been this whole debate in my meetings, at least. Do you pay attention to the 2016 Trump playbook or the 2018 playbook if you're worried about the tariffs? The market's not down today. It's managing to take it in stride, but I'm seeing that old tariff playbook from 2018 showing up, because back then, if you look from March to December at the height of the China trade war, it was the defensives outperforming, materials and industrials were lagging, and industrials isn't quite conforming to that today, but the rest of them are.
Interesting. Yeah, no, it's worth a reminder. A lot of stocks are down today. Breadth isn't so great, but it is selective. So, Lori, great to talk to you. Thank you. Have a great
to
weekend.
Talk to you, too.